Actually, listening to Sandeep Tandon, he's the founder and CIO of Quant Mutual Fund. They got into this entire PSU space sometime back. Almost a year and a half out back. Got into PSU banks in a big way, paired their positions there, still invested in railways. They're kind of rotating out of, but still very bullish on the metals and mining theme. So PSU is still very much the focus there, with between 18 and 25% weight in many of their funds. Listen to a slice of this conversation.
So from India perspective, if I look at Prashant, the way right from 2023, I said that years belongs to neglected zone stocks, most hated zone stock. If you really look at from a growth versus value debate, which keeps on happening globally, the cycle which started in August 2012, the growth at any price, that lasted till September 2021. Okay, the cycle peaked out. After that is the value thesis which has come back. Now I'm not saying that entire move is going to be a linear move. Okay, within that you will see some cyclical up move or cyclical down phase also. But our portfolio is now more pro-cyclic, pro-value. Why I'm saying that? Because
which is hard assets.
Hard asset. Okay, we strongly believe that the perception which was there, okay, for these, if I have to, let's say in September 2021, there was a euphoria. And if you dissect the euphoria, you find the euphoria was in new age, technology company, growth company, not in value, not in infra name. So I think that
but we've come a long way from there.
Yes, but still, our view is that value as a thesis has a potential to last for a decade. It's a decadal view. Wow. Okay, and then look at the PSU moves. PSU is the classic representation of value thesis. They were beaten down.
Is that the highest weighted sort of space?
Yeah, for us is a very large weightage. We are relatively
if you define by ownership, would you say PSUs are your...
Yeah, it may be closer to, some schemes are 18 to 25% of that portfolio will be in PSUs.
Okay, and do the moves make sense? And we're talking about banks or we're talking about PSUs across the board?
We have banks also, but the percentage is very small as compared to 2 years back.
Okay.
Now, earlier 2 years back, the banks...
So PSUs ex-banks largely?
Largely ex-banks, ex-banks.
But there also, some of the moves have been phenomenal. Railways as a sector, there's defense as a space.
We have a large ownership in railway stocks in our portfolio.
And you're comfortable owning them?
Comfortable. Because you have to look at the thesis which you are bringing. When something gets changed, okay, when you say one perception of the most admired territory gets shifted, the shift, even let's say 10% of the money shift from admired territory or the most admired stocks towards value stock, the money is very, very large. Like when I say, let's say, why I'm slightly more cautious on US, we always say that developed market risk appetite has peaked out, okay, and liquidity will shift. So how money shift from high risk to low risk environment? If 10% of money shift from US to Asia and India in particular, there is tsunami out here. Something similarly, look at in last many years, last 10, maybe 1 decade, a large portion of concentration was confined to these admired territory stocks. If 10, 20, 30% money shifts from that territory to this value as a thesis or neglected zone stock, there is tsunami. Okay, and we are already witnessing that phenomena happening. And where is the over ownership? Okay, as compared to 2 years back, they were neglected, hated zone, but they are still not reached the admired zone.
But valuation-wise, I was looking at names like RVNL, etc. Now they're trading at 40, 45 times.
So I'm saying
earnings,
you have to do sector rotation, stock rotation. I'm not saying that one particular stock you have to participate. Like we were very early in PSU banks, we monetized that opportunity. Now we are somewhere else. So the sector rotation thesis, stock rotation thesis, you have to play to manage your risk.
But you're saying there is enough to rotate into.
Yeah,
because sometimes one feels that rotation तो हो गया अभी कहाँ rotate करें?
I will not take the name. Look at the top largest PSU companies. If you look at top 3 in terms of market cap, where is the ownership?
Right.
The largest public sector enterprise, the free float is 3.5%.
Not banks, right?
Not bank. It's not a bank. But where is the ownership? Okay. It's one of the large bank company available, not valuation-wise very expensive. I'm just giving example. And similarly,
ONGC and
they're Coal India, they're ONGC, they're LIC. Top 3 names are these 3 names you will get. Okay, where is the ownership in these names? On a relative basis, absolute basis.
Own all 3?
Yeah, we own all 3.
Okay.
Our portfolio is already disclosed, so we can talk about it.
And bullish about?
Yeah, we are quite constructive on this space. Okay. See, we believe metal and mining as a thesis, which we started in 2023, I think will continue in 2024. PSU as a thesis will continue. So then you look at PSU and mining put together, and a PSU mining company will do even better, because overall PSU we are constructive as a theme. Then we are constructive on mining from a global perspective. We are very constructive. We think the
I
mining
think
is
Hindustan Copper is something that you own in your funds.
Yeah, it is one of the large holding in our fund in a small cap. We bought at very early stages, but we are holding it for last 3 years
And
now.
that came off a macro kind of a call.
Yeah, for macro call.
One name which you, I don't think, have own in your portfolio is HDFC Bank. Or I mean, why is
No,
that?
it's not been. Currently, we don't own it.
I mean, you used to own it.
Yeah, we used to own it.
But private banks is something which, I mean, the street is extremely bullish on. It has been bullish for a while,
Yeah.
but that has not worked
Correct.
for some time.
So this is the same answer I'll give you. If you look at the pure valuation aspect, valuation was attractive. Everybody was talking about it. It was a very consensus trade for a while. But if you start looking at the risk appetite data or liquidity analytics for the sector as a whole, then you realize some of these names actually peaked out way back in September 2022 itself.
When you say peaked out, you mean
Reached out a peak. Okay, when I say peak out, not in terms of prices, like risk appetite was the highest between September 2022 till September 2023. So risk appetite has peaked out, which means there is no urgency to buy for anybody. Okay, liquidity cycle is actually shrinking. Okay, so if liquidity is declining, so it's a bad combination. See, other way, when liquidity cycle rises and risk appetite is rising, you make more money. When otherwise it happens, okay, so risk appetite peaked out, liquidity shrinking is a reverse combination.
Sure.
So that's the area we try to prune out. So we maybe I think overall we have only 3.8% weightage in the banking as a whole, in the entire portfolio, depending on scheme to scheme. So we are grossly underweight on the banking side.
and that has worked wonderfully well for you.
So far it's worked very well.
It has worked.
But again, it's a data-driven approach, not
data.
on the.
And if the data
contra
changes,
call.
you will.
We have no problems.
But as of now, it's not showing any signs of.
So if you ask
changing
me
or
from
turning.
a near-term perspective, maybe we have seen a massive sell-off, so maybe pullback rallies can be there. But to take a decisive call, I don't think they have reached those neglected zone where we get like what was pharma in February, March, okay, or IT was in September. I don't think they have reached that phase where we will say go all out and increase the exposure. And again, it's a consensus trade, grossly overowned space. Okay, so we don't mimic indices. So we are very active money manager. So I look at industry closely. A lot of people look at closer to the benchmark allocation. We don't do that.
Got it. Is the market in fine shape, Sandeep, or you think we should be ready for a little more volatile 2024? I mean, ups, not just ups, which everyone is just used to, and some downs as well along the way. What's your sense?
So let me give you larger thesis. We have been saying India, this decade belongs to India, maybe half century belongs. Manufacturing as a cycle, larger thesis I'm talking about, looks very good to us. Anything, and again, the manufacturing is a very large thing, manufacturing, infra, as a space is doing very well. But again, as compared to maybe 2023 return, because everybody was very skeptical in the beginning of 2023, and obviously returns are far superior, you may not get something similar performance. But we are still very constructive on the entire India space. I have been talking about that we are in bull run, very decisive bull run. We are still in bull run. But easy phase of bull run is over.
So you crossed the 50% mark.
Maybe in certain sector, maybe certain stocks could be answer is. But if I have to look at summarize in the thing, I think maybe in 2024, at least I expect 24,000 nifty. That's sort of minimum what I'm expecting this year. It's still a good growth in terms of return perspective. It's a good number. I don't think we have seen a stage which is very classically euphoric, where we need to be worried about. But stock rotation, sector rotation is the thesis which we play, and that really help us in reducing our.
Okay, interesting chat over there. But let's talk about.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.